Joseph, Thomas, welcome. Linda, Elizabeth, William, Michael, Robert, Nancy, Matthew, Anthony, Margaret, Betty, Sandra, welcome everyone. I can't read out everyone's names. As I said, I was really just filling in time as we got live on Facebook, which I believe we are. So all of our Facebook listeners, welcome. Excited for today's session. We've got a lot of great topics we're going to run through. So can't wait to get stuck into those. I'm a little bit behind on my slides, so I'm sure I've made some mistakes or not put anything in here. If I have, bear with me, forgive me, don't hate on me. So without a further ado, let's get started. I'm going to share my screen. All right, everyone. Well, thank you again for joining us today. It is there you go. I've even made a typo on the first slide. It is the 17th of Feb. I must be at the work from home days and haven't updated this. So don't be confused or alarmed if you think you've lost an entire week. This is not Back to the Future. It is question time. It is 2:30 p.m. here in Australia, Melbourne, Sydney time. So again, welcome everyone. The question and answer is open now. So those of you that are dying to make sure we answer your Q&A, jump in, put it in now. You'll be top of the queue and the guys will be able to study that right now and make sure that they're ready for those answers. Everyone on the panel today, I'll introduce shortly. As always, those of you that are first-time listeners and are wondering a little bit about Salvo, what do we do? Well, we need a whole nother hour and a half for me to run through that because we do a ton of great things. However, ultimately for us, it is all about creating homes for people. So that is what we do. Whether it be you buying your first home, a new home, it might even be building a home, right down to the other end of the spectrum that you may be renting, moving out of mum and dad's house for the first time. We can help you on any step in that journey. That's what we love doing. That's what we're all about. So that is Salvo if you're confused and unsure. If that sounds like you, then you are in the right place, and I think you're going to enjoy today's session. What were this week's themes and major events? I already saw before I did this, I have not updated this slide, so I'm going to talk through them and not show you the bullet points. This week we saw in our newsletter, and a lot of discussion obviously has been around the snap lockdown here in Melbourne, Victoria. I don't even think it's really worth talking about too much because we're out of it tomorrow, so that is good news. We've talked about what is it like to buy a property with a partner that you may not be married with. What about a coastal holiday home? Investor home loan rates, they're on the way down. We've talked a lot about owner-occupier interest rates, and it looks like finally investors are catching a break as well. Also, Greg's going to talk today about what are some of the tips you should be doing to capitalize on the current market conditions today. So when I do these points, I'm going to run through them so quick because they are last week's points. First up, CoreLogic auction results. Always love to put this slide up. Whilst it is not definitive, it is always a good guide as to how the market's going. Last week, we saw almost 85% clearance rate nationally. Melbourne had 87%. I don't know how they managed to achieve that, given that this was only online auctions. Any of you people out there that have studied it and want to let me know if I'm missing something, I copied this live from CoreLogic just about 5 minutes ago. Sydney, another stellar performance, so that's fantastic. And the rest of the states and capital cities also performed very well. So I think this really is tying into what we're seeing on the ground here and what we're talking about, that there is a significant amount of demand and is looking very strong at the moment. The REA Insights, again, another typo. This is Feb 17. I have updated these. This is what we call a leading indicator. It is not fact. We get this from realestate.com.au, the largest property portal here in Australia. And this is really an indication as to the types of activity and the intent of buyers that they are seeing on their website. So it gives you a bit of an insight as to what might be coming and what the general market is feeling. You can see it's a very strong position, both nationally and here in Victoria. This is the highest that it's been ever since they started this survey. And I think we're seeing about 43% higher than it was this time last year. Obviously, this is still pre-corona. If we go back 12 months, so I think that's a great result. Given that, we have seen it fluctuate over the last few weeks, as you can see, and there was a small decline last week. However, we are still at great highs. I think the most important thing to note here, and we are going to chat about this later, is that when you see these results, it's important to also look at the actuals that are coming through. Are we seeing high sales volumes? Are we seeing good clearance rates? Yes, we are. And the volumes I didn't mention on the previous slide, but we are still seeing huge numbers of properties go to auction and actually translate into transactions and sold sales. So I think, for anyone who's unsure if this is just hype and not translating into reality, you are definitely seeing the reality come through. Investors love to chat about the rental. We did have a bit of a decline nationally and in Victoria in terms of the intent. I mentioned last week that we always see a bit of a spike in the first month of the year. However, we are again, much like with the sales, still over 20% higher in the intent for looking for a rental property than we were this time last year. We talk about it a lot here. We obviously have a large focus and customer group of investors. Rents are tough right now. Those of you that have got inner city apartments are suffering and seeing a lot of pain. However, the good news is right across the country, particularly here in Melbourne and Sydney, those temporary laws that were put in place, we're pushing back, I think 9 months ago now, will be ending at the end of March. And most states and premiers have confirmed they will not be renewing that. Now, whilst it's going to take a little bit of time for that power to get back to the landlords, we're definitely going to see the incredible power that tenants have at the moment start to pull back and become a slightly more even market. There is no doubt that they were good measures for some of those tenants that were suffering and deserved it. However, I know a lot of people out there have been what we call taking the piss and making the most of these rules to leverage an unfair advantage against their landlords. So good news, if you are a suffering landlord, they are going in at circa 6 weeks. And whilst we will not see an immediate turnaround, we're definitely slowly going to see that equilibrium come back to a more normal level. All right, let's run through this. What's more important, information or knowledge? I want to know, what do you think is more important? Greg, put everyone out of their misery. What's the answer?
Knowledge. Done.
Good. You got that right. I was worried last week someone might get it wrong. Why do we say knowledge is important, and why do I want to bring this up for those of you that join every week? I want to keep making sure everyone understands that what Question Time is all about is helping you create what we call actionable knowledge. So information is a collection or an organized data about something. What we're all about here, and what is really important for everyone out there on the call today, is to actually have knowledge, which is an understanding from either education or experience. So what we mean about actionable knowledge is being able to take all of that information that's out there, turn it into knowledge, understand what it means for you, and very important next step is create actionable knowledge. That is, what steps should you be doing based on this information today, tomorrow, and into your future? The best way to do that is join us every week, fire the questions at us. We will talk about what we think was the most interesting and topical stories from the week, and hopefully help you create that database of actionable knowledge. Why is it so hard? Everyone knows that anyone can put information out there, and it can be very challenging. And for most people, they find it all too consuming and perhaps a little bit intimidating to understand who should they be listening to versus who they should be throwing in the rubbish bin. We call that fake news. Anything that looks like rubbish, 9 times out of 10 deserves to be in the bin. We have an industrial grade shredder in our office, and quite often I get a lot of information off YouTube or the internet, and I do a ceremonial shredding of it because it upsets me so much. Those of you that don't have it, just close it, delete it, mark it not relevant, whatever you do, whatever device you're on, whatever news you're looking at. All right, I've been chastising you for now just over 9 minutes. So who am I? Those of you that didn't get my introduction, my name is James Maitland. I'm the general manager here at Salvo Property Group, and I've helped create more than 11,000 homes for people like everyone on the call today. Joined today, we have Greg Arbeck, who's got more than 30 years experience despite his good and young looks. Jack Gian, high-rise specialist, been doing this for almost 20 years. And Lucas Karras rounds us out with more than 25 years experience. So I will be hosting the session today and taking all of your questions and asking these guys for their answers and their thoughts. If you are unsure and you've been living in a cave and don't know how to use Zoom, there it is, easy, jump on it, ask your Q&A, and I will try and get through everything I can. All right, so let's end this slideshow, stop sharing, and get stuck into it. Lucas, give me a wave. You can see me okay? Great. All right, so for those of you that haven't asked a question yet, jump in now, ask your questions, get stuck into it. I want to ask the question first up. We talk about this all the time, holiday home. Are they a good investment? What's happening right now across the country? I would love to have a holiday home everywhere I go. Jack, what are we seeing with holiday homes?
Yes, James. So we just saw the report from the domain, which is very surprised to us. The property price in Australia in the coastal areas, which is along to the beach, during the 2020 last year, the property price has significant increase. So I got some figures here, so I'm gonna sharing with everybody. So for example, in New South Wales, the Byron Bay, the price rose 37%. And in Victoria, everybody knows the Mornington last year, the price rose 14.6%.
All right, so the obvious question, Jack, I love Byron Bay. I'm a huge surfer. That is my passion. I want to have a holiday home there. Is now a good time then to be buying in these areas?
If you really dreaming that kind of the lifestyle, want to have a holiday house, you want to spending time there, for example, of course, you're gonna have lots of money. Of course, you can buy the property there.
I have no money. All my money goes to pay your wages.
But if you're looking, for example, not a holiday house, it's an investment, or have a property along the beach and maybe rented it out, and maybe expecting the capital increase, and I might say it's not the best timing to get an investment property there, because those area is being already so popular.
All right. So I think that's an interesting point. I can see a few questions coming in, but I'm going to throw you a few more because I think I know the idea that everyone's got here coming through. So, we talk about, things that we love and we want, like the footy and great food and so forth, versus things that we should be doing and that we need to set ourselves up for our financial future. So with that in mind, if we're thinking about a holiday home as an investment, what is that a good idea specifically as an investment? And if it is, what do we need to do to make sure that we buy right and we get a good holiday home that is still a smart investment?
Yes, I think it's still a good idea to get an investment property in the coastal area, because it's for my opinion, it's still got a potential for those property to be increased, but you need to really, really look into the right property. First of all, you need to look in like we said, the most important things for the investment in real estate: location. And you might look in the location which has the good facility like school, public transport, and a public health service. But you also need to look in those areas. Is the price already been at the top? I mean, in the peak, or they still got a big potential for you to investment?
Okay. So let me put it to you then. Should I be buying, if I'm thinking smart and I want to be an investor and have an investment property, should I be buying in a capital city, somewhere like Melbourne, or should I be buying in a regional coastal area if I'm thinking as an investor for an investment?
For me, 100% in a capital city. And for example, in Melbourne, Sydney, those always like very stable and a huge potential to be increased.
Oh, good. Now, we are obviously all at home. We're seeing Lucas's beautiful home there. Most of us have got a virtual background on. My kids are in the background doing Zoom, and I heard them yelling out in horror and pain when you said, no, we should be buying in the capital cities. I know they had dreams of a nice beach holiday home, but I think for everyone on the call today, it's very sound and wise advice. Think with your head, not your heart, and really focus on those key things that we always know about location and reasons why it makes it a good location and how you're going to get a tenant. So whilst we might see the romance in these holiday destinations, there typically is a very, very small market there for investors. All right, let's move on. Another one of my favorite stories. Greg, what the hell's flipping? It's obviously not flipping an egg, sunny side up, sunny side down, whatever. What is it?
Flipping is taking a property that you've bought, adding value to it, renovating it, and then reselling it. You flip it.
Right. So can anyone do it? I know I'm a big fan, or I was a big fan of the Kardashians. And those of you that know them, Scott Disick has a show called Flipping It Like Scott Disick.
Yeah.
And it seems easy. Everyone can get rich. Is that the case?
Absolutely not. Flipping, you can make money, but it's not as simple as people think. I think a lot of people get into it with that idea.
So why are people doing it now? Why has this become a bit of an interesting topic again in today's market?
I think a lot of people are looking at it and they go, hang on, the market seems to be rising. Everybody thought it would fall out, but we've seen that the property market's going and it's really increasing. Interest rates are low. So you've got a few people saying, let's get into this. Let's do this quickly and let's try and make some money. Be careful.
All right. So what are some of the successes that people can have, and what have they done perhaps that has made them successful at flipping?
There's the key things is buying right. So it's not about selling right. You've got to buy right. So you've either got to buy something that's you've bought it lower than what the market value is, which is very hard at this particular time, or you're in an accelerating market that's so crazy that you're going to make money regardless. So those are is buying right is a key thing. Knowing what to do. So just general cosmetic changes, not major in things. So it's you got to know what you're doing, and it's not a quick rich screen. A lot of people do it, and as you always say, as well the company always says, have time in the market. Don't try and flip it very quickly because you're likely to lose.
Yeah. All right. So I think you've covered it off, but maybe Elizabeth's asked a question saying, so what should I do if I want to look at being a flipper? She didn't use those words, but I've added to it, Elizabeth. So I apologise for there. I love saying flipping and flipper. So the question, Greg, what should Elizabeth think about if she wants to be a flipper?
Okay, step one, as we said, buy right. So you've got to make sure you've bought in the right location. Then don't over capitalize. So you've got to do general cosmetic things, and then take into account there's some very key things you need to really understand. There's stamp duty concession, there's stamp duty, there's conveyancing fee, the renovation fee, there's pest fee. You can't just go, hey, we're going to buy this thing, spend a few bucks and make a lot of money. They really need to do their homework and understand they've got all these costs, holding costs, all these legal things, renovate. There's a lot of things involved. It's not a case of just getting in there and making a quick buck. It's not like that at all.
All right. So can I ask the question another way? Because I can see Tom's asked a question about it as well.
Yeah.
Why do people fail? Or if we can look back at some of these failures, hindsight is a great thing. Yep. Perhaps can you enlighten everyone on the call today? What are some of the reasons why people have failed when they're trying to flip?
Because they're trying to do it too quickly. Time in the market. They think they're going to do all this thing, make a huge profit quickly and get out. No.
I also like to mention to everyone there, it's a little bit like a nightclub. You've got to pay the door fee, the entry fee, and it's expensive, and you don't even know what's going to happen inside, whether you're going to have a good night. Then you've got to pay all those holding costs, buying the drinks and so forth.
Yep.
And then when you exit, you've got to pay for the taxi home as well. So
exactly.
There's a lot of costs involved that I think perhaps people forget to take into account Greg, I think it'd be fair to say that it's easy for us to look and say that house, look up, since everything's on the internet, that house was bought for 500,000 and was sold 2 years later for 600,000.
Yep.
But perhaps the holding costs, the entry and exit fees could have been 150.
Well, James, it's just, if you look at a typical, if you have, just indulge me for a second. If you say a typical $1 million home is nearly 45 grand's worth of cost.
That's more than my annual salary.
Yeah. So 45. Well, yeah. Okay. But just without renovation, without unknowing about pest control, all these other things, those are fixed costs, and that's being conservative. Straight away, 45 grand, you've got to allow in a $1 million property. So it's not as straightforward as people think.
All right, everyone on the call, hopefully we've answered most of your questions there. I want to move on. Jack mentioned he crushed my dreams of a surfing holiday home in Byron Bay. Greg's told me I can't be like Scott Disick. So Lucas, investors, home loan rates, they're always higher. Investors don't seem to be getting the love the last few years from banks. What's the story? Is that right? And what's available now for people if they are investors?
Look, it used to be the story, but no longer the case. With regulatory controls easing and demands for residential property growing, now we're seeing investors being offered cheaper rates, much more cheaper rates than what they used to. And look, the banks are aware that all the government incentives, the owner builder grants and so forth, they're all coming to an end. So now they have to get ready for all the investors that they're expecting to come into the market. And so they are giving now some great rates for investors.
Okay. So, we mentioned it before. Is there actually a lot of lending happening then, out there, or is it just they're trying to, up the amount of lending?
Huge lending. Just to put in perspective, in December, we had a new record high of $26 billion, which is 9% up from previous month and more than 31% up from the same time last year. Okay.
So, if there is a lot of lending happening right now, what sort of rates are people seeing out there? What can they expect? Sorry, I was just my kids have got rabbits in here and they're running around my feet. So I was trying to multitask for those of you that were wondering what was going on and trying to get them away. I know, Lucas, you've got a rabbit at home too. Hopefully not running around your feet and trying to bite me. So sorry, let me ask that question again. Why are these rates getting better? And specifically, what can people maybe expect they're going to see?
As I mentioned before, the rates are getting better because the banks are aware a lot of these government incentives are coming to an end. So now the sort of getting ready for all the investors that are going to sort of really dominate the market in the coming months. So the kind of rates currently, we can see 3-year fixed rate for investors for as low as 2.09%, and fixed rates for 3 years for owner occupiers as low as 1.75%. As you can see, the gap is so much closer than what it used to be in previous years.
All right, you love giving us tips. So, what should anyone out there on the call today be looking at, and how they're going to make sure that they're getting the best rate possible for themselves?
I'm glad you asked me that question, James. Look, you always have to look at the comparison tip. You always got to be the comparison rate. You got to be aware. Sometimes you see the low interest rate, as I said before, 2.09%. But you got to remember the banks have to add fees like setting up loan facility fee, administrative fee, and those fees do pump up the rates quite substantially.
Okay, good. All right, let's move on from that. I perhaps could say if anyone is interested in knowing more about that, reach out to us. Those of you that don't know, as I said, I didn't go through every business we do. We do have a very large home loan brokerage business here as well. So we know all those rates and can definitely help anyone out on the call if they're interested in knowing more. So maybe let's move on. Market predictions. What's What's everyone thinking at the moment? We talk about this all the time. How much have they changed, since this time last year, this time 6 months ago, even 30 days ago? What are we seeing that's different?
Well, I think straight away we've seen that the market's incredibly volatile but exciting at the same time. Last year, there were these massive projections of essentially the floor falling out of our property market, which didn't occur. And we've seen actual increases and continual increases. In fact, we've just had a 1.1% increase again. So in property things. So it's very exciting times.
Right. So Greg, I can see a lot of questions coming in now. I'm going to just guess what the questions are. Why are there still buyers then? Because obviously there's a lot of people out there that are hurting still. Particularly here in Melbourne, we heard a lot of stories over the last few days of Valentine's Day vendors, florists that make their entire revenue in one day, being destroyed. Why are there still buyers out there then?
We go through the same things, historically low interest rates. So people that, even though maybe on a lower income, can still benefit from, they can get into the market because it's a cheap borrowing. So they can still get into things like that. Then on the flip side, but you've got people that are actually highly paid jobs that have put a lot of savings aside. They've really been able to put money aside over this period.
Yep.
And they're sitting there looking at the market going, this is a great time, let's get in. So there's these two from both ends, people looking at property.
All right. So, we talk about actionable knowledge. Tell the people on the call today, what's the opportunities today, right now? What should they be doing?
Firstly, if you're going to invest, make sure you've got finance, and then we'll have a plug. So you know what
roll
you
back
can
about 90 seconds ago, and
90 seconds ago. Yeah.
Yep.
So the tips always they say is make sure you've got your finance, know what you can buy. Then you get out there with that knowledge and that certainty, have a look at opportunities. Sometimes, even at the moment, people would say, let's stay clear of CBDs, etc., because the rents are so low. But in effect, that's actually an opportunity, because you can get in there and still buy property fairly reasonably, and you just sit tight, and the rental returns will come back as and when things start opening up. And that is a very, very good opportunity. Step one, get your finance in place, and then look for great locations. Even with low returns at this stage, those will turn around and you'll see the benefits of it.
Okay, Greg, let's outdo. I know Lucas loves to be Mr. Tip Man. Your tip then is look past this short-term negativity and fluctuation.
Correct.
Inner city apartments could be a good buy.
Absolutely.
Take this opportunity, even though rents are down, they are going to come back.
Yeah, absolutely. You have a look at it and everybody's going, they're all terrified of inner city stuff. It's going to turn. And it's a perfect time now where, like Jack talked about, rural places increasing 40%, which is insane, and is unlikely to have huge gains again. You're getting into the city market, which is a bit flat at the moment. Get in now. Get in and take the lower returns initially, because the upside is going to be much bigger down the track.
All right. Yeah. Very, very sound advice.
Yeah.
All right. It is the top of the hour. There is one more topic that I wanted to chat. So I apologize to those of you on the call that may need to duck off. I'll try and wrap this up quickly, but it was a very, very interesting story. And I know this is one of Lucas's passions. Buying a property with a partner, we're talking here perhaps not direct family, not mum and dad, not someone you're married to. Is that a good idea? What are the pros of doing such?
Look, I think it's a great idea. I personally did that with my wife before we even got engaged, and then later on got married. So let's
is she looking at you right now? And you had to say that so positively?
No, not this time. Look, obviously, when there's two people that are applying for the loan, it's easier to secure a bank loan. Combining two incomes gives you a more competitive interest rate and, of course, a larger borrowing capacity. So number two is that, look, you're setting up the future for your family. It's a lifelong commitment. It's a milestone to be proud of, and you also got to choose the right property. So if you have a pet or you're planning to have a child sometime soon, then you got to get a property that sort of can accommodate both of those things.
Okay. What about the cons? There obviously must be some.
Yes, of course. Look, your partner can also impact negative your borrowing capacity.
She definitely mustn't be in the room then. Now you've been able to mention that.
So basically, for an example, if they're not working, or if they've got a bad credit history, that will also affect the loan application. Now the other one, and I just got to make sure she's not around. Okay, look, sometimes couples do separate. So although when you purchase a property, everything was beautiful and loving, when you separate, you try to be civil, but that's not always the case. So there could be, huge problems if it gets to that, unfortunately.
Okay. Now, I know that you want to tell everyone your tips and what you should be doing. So how do we bring this home? What do you suggest if people are thinking about it? They want to take the plunge like you did with your wife a number of years ago. What are your tips and what advice can you give them?
Look, I think one of the important tips is when you do decide to take the plunge, have an agreement in place between you. So in case things do ever go sour one day, at least you do an agreement while you're both on the same page. And then, it's not going to be difficult later. And also my second tip is take out an insurance, like a life insurance. So in case something happens to you or your partner and there's a death or a disability, permanent disability, the person that stays behind, whether it's both of you or one of you or family, they don't have to deal with a huge home loan. Normally the insurance pays it out and that person, or if you got a disability, can continue enjoying everything you work so hard to build.
Great advice. Now, since I am the host, I want to steal the last word here with my own tip. The other tip is, Greg mentioned it, Jack mentions it, Lucas mentions it every week. One of the best things you can do, talk to a broker or your local bank up front and find out where they're sitting, and potentially that will help you overcome some of these pitfalls. So as Lucas said, if you have a partner, it may make sense to have them as a joint owner on the title, or it may not. So it's often best to get that advice up front, and there's many different ways to secure that joint ownership that may not necessarily mean that you need both people on the loan. All right, we've got a few minutes over. So guys, great job. I want to just share my screen again and close this session out. So bear with me a moment. 2021 is well underway. The way that I see it is that right now you've got three choices. You can either go down path A and do nothing. I just suggest to you that if you don't make a change, you continue doing what you've been doing day in, day out, then you're going to continue to get the same results. What I really, really hope that you do as a bare minimum is take on board what we've talked about. There was a lot of great tips there, a lot of great advice, and put that in place and create that actionable knowledge for yourself. But my sincere hope, and what I really think you'll get the most value out of, is if you do it with us. So that is, let us help you set yourself right for 2021 and really get that actionable knowledge happening. So how do we do that? There's a lot of ways that we can help you. I think perhaps the most active and most dedicated way is for us to catch up one-on-one. Doesn't actually need to be a physical meeting. We can do it on Zoom or FaceTime, or it can even be a phone call. We prefer to at least see each other. And I think that's where we can really add value and see if we are a good fit for you. What does this involve? Pretty simple. We're talking about 15, 20 minutes maybe, where you'll meet your expert, have a chat about the market conditions, any other questions that you might have that weren't raised before. Talk about what you're hoping to do in your future and what plans you have in place, and then sort of talk about the next steps. So, I think this is a really important process because we can't help everyone, and some of you may not be a good fit for us. But I think through this process, if you've got value out of today, it will be a good fit for you and it will be right for you. Who is it that we can help? Well, anyone who's focused, motivated, actually wants to get involved and do the hard work, they're the right kind of people for us. Those are who we can help. Importantly, you want to increase that database of actionable knowledge that you have, and you don't want to kill yourself in the process. You've also got to be hungry and prepared to do the work. So, we work hard. We will put our heart and soul into helping you. We expect the same back from you. So that's who it's for. As I said, if you're still on the call right now, then you are the right person to be helped by us. How do you do it? Pretty simple. The link should be in the chat. You can jump on that right now. You should have been redirected via your web browser to the booking page. For those of you that don't have your diaries with you, I will send you a follow-up email with a link, and you can check and find your suitable time. You can't press that button on the screen, so anyone trying to do that, it does not work. All right, so look, that is pretty much it for us here. We've gone a few minutes. What have we gone? Almost 10 minutes over time. So I thank you very much for those of you that have stuck around. It's a great session that we do here. We do it every single week, and we really encourage everyone to get involved and bring their energy. So those of you that are asleep, thank you for attending anyway. Hopefully you'll wake up soon. If you do have any more questions, we will hang around for a few minutes at the end and try and answer those. So if you've got to jump and go now, then thank you very much. We appreciate all your time, and I know that it is busy and most of you have a lot of things to do. So from me and all of the panel, thank you very much for today, and we will see you hopefully again next week, same time, same date.